Taking a look at today's energy markets, I want to focus on WTI crude. WTI crude actually rallied during the day session. We did see it up for the fifth consecutive day, slightly higher, right around 58.30 level. We saw a high of 58.82 and a low of 57.98. However, I can tell you in the after hours session, we are seeing some selling pressure as the market continues to digest the Fed announcement and the data that was released today. And with that, we're actually seeing WTI now down on the day below that 58 level. Looking at the data that came out over the last couple of days, so again, we had the API number yesterday, much stronger than expected draw, about 8.5 million barrels from that number yesterday, seventh consecutive draw from the API number, and then that was really confirmed this morning by the EIA number. We saw a similar 8.5 million barrel draw, expectations about 2.5 million barrel draw, so again much larger than expected. And initially we did see quite a reaction in the crude space, and that's when we saw WTI go to the highs of the day, that 58.82 level. And then throughout the day we saw it hovering right around the 58.40 level, 58.30 level, and then as I indicated, moving towards the close and into the after hour session, we are seeing some selling pressure. And as we see, the US dollar is rallying strongly after the Fed announcement. I think that's part of the reason why we're seeing this continued selling pressure in the after hours market. We look at the US dollar breaking firmly above 98 now. Highs, I think it's through a 3-year high for the dollar, if I'm not mistaken. But nonetheless, we have not seen the dollar break through this 98 level and maintain this upward trajectory for quite some time. And with that, that would serve as a headwind to the commodity space and certainly to the crude space as well. So I think that's another factor here playing into why we're seeing some of the selling pressure this afternoon. Couple that with the fact that the market didn't really receive maybe what it would hope for from the Fed as well. The Fed removed a little bit of the accommodative stance. Basically, they did cut by a quarter point. That was to be expected, but they didn't give the market more as far as what they're going to be doing in the future. They basically said this was a mid-cycle move and that it's not a start of a rate cutting environment, and they're going to take the data as it comes out and make a decision over the next month what they're going to do September. But at this point, September, they're indicating that they have not conceded that September they're going to cut another quarter of a point. We saw selling in the equity markets, and I think that transferred over into the commodity space, where we saw crude now actually down in the after hours session below $58 a barrel.